do. Hit that record. So I gotta say, shout out to Trader Life 79, Alfredo, Angel, Anna, Anthony, Fry Daddy, BW, Charlotte, Christopher's D Wiz in the building. Make that man a co-host because it's D Wiz, y'all. Dana, Dean George, Deborah, Denise, Donice, Enrique Gonzalez, Vasquez, Hanif in the building, Mentee, woo, killing it. iPhone, Jamie, that's one. Jay Shad, John, Camille, Kiana, Kiera, Lindsay, Los, Luther in the house taking trades finally. MOC, Math, Nebraska, and Katie, not just one of the other. Miss Bell in the building, Paulette, Kiana, Quinn, my guy, Rosa, Seth, Shay Dub, Smith, Tanya, Tiffany, Tracy, Wally, Woodland, and Zoom user. And it might be somebody else that I missed who came when I was doing that. Shay Dub, I'm going to kick you off the Zoom because you're not joining us in Vegas. So goodbye. Just a joke, y'all. All right, let me go ahead and pull the screen up. Boom, baby. So we're talking about gaps. Reason we're talking about gaps is because I was running a class maybe 2 weeks ago, and people were like, I was like, what y'all want to learn? I was talking about gaps at some point. They're like, yo, let's have a gap class. And we have a class ideas section in the Discord. Right. So I'm like, yo, put your ideas in the class ideas section so I can know what y'all want to learn. So I can teach y'all what y'all want to learn. Y'all want gaps. So here we are. So we're looking at gaps. We're going to talk about, the basics of a gap. So what is a gap? How do gaps happen? We're going to talk about that. We're going to look at some examples of different types of gaps. We're going to look at how you can trade gaps. And that's really, it's kind of a simple concept. So don't make it too complicated. Like anything else, try to let things be simple. And they will be simple. Try to overcomplicate things and they will feel overcomplicated, right? So with gaps, what happens? So there's pre-market, there's post-market, right? After hours and the pre-market trading. So what will occur is with the close of the day, 4 p.m. Eastern, right? That's where the market closed. That's where everything gets cut, right? There's post-market trading and then there's pre-market trading. And in those hours, outside of regular market hours, when you have prices moving up and down, your next day, your opening price can be different than the day previous, right? The days you closed at. So if you close at $40 on a stock, but then post-market, some people are trading it, it opens up at $41 the next day, you now have a $1 gap, right, in the pricing. And you see that on your chart like this right here, right? Big gap. This is a big gap, right? There's typically going to be a lot of smaller gaps. Stocks that get traded heavily, for the most part, they're going to gap fairly frequently. But albeit though, a lot of times the gaps are relatively small, and a lot of times they'll fill very quickly, like same day, smaller gaps. All right. So why do we get gaps? Like I said, you have pre-market, you have post-market. The movements will cause the stock to open up at a price that is higher or lower than the close price of the previous day. Some other things to take into consideration outside of regular trading is going to be big catalyst events, right? So you have earnings, for example. A lot of times you'll see earnings like Amazon and Apple, right? If we pull up Amazon, this was our earnings gap right here. So let's look at this one. We didn't even look at the current one, right? So Amazon had earnings back here in 2021, right? The following day, because Amazon releases earnings post-market, the following day, it gapped down all the way down here. As you see at the top left, it finished that day down 7.56% compared to its previous day. Okay. Now, interestingly enough, it looks like there was an earnings surprise here, but the revenue estimates were off by $2 billion. So that might be tied to the reason they dropped. But on this side, they missed both ends of the spectrum. But then the stock looks like it went up after the gap down and shot back up. Ultimately here, filling the gap, and we'll get to filling the gap as well. Okay. So you guys should know now in that quick, told you it's going to be quick. That was about 3-4 minutes of me explaining what gaps are and why they happen. All right. Y'all know me. Drop Y's in the chat if what I covered so far made perfect sense. It's very simple. If you're confused, drop it in, and then I'll allow a question so I can clear up your confusion. But please give me Y's in the chat, just the letter Y if you're getting it. Okay, cool, cool. Appreciate you. Very simple. Yeah, yeah, yeah. Gaps are not complicated. Um, so I do want to make sure, as always, that I don't move forward and leave somebody behind who's stuck on something I might have said. Right. So if you don't get it, don't let me saying it simple make you feel like you can't say, no, I'm confused, Jay. Say it so that you can make sure you got it. At the end of the day, the point is for you to get it. Cool. So everybody so far responded wise, they're getting it. All right. So when it comes to gaps, there's different types of gaps. You have continuation gaps, you have exhaustion gaps, you have breakout gaps. And I like to use breakout and breakdown interchangeably because when you hear breakout, you automatically think to the upside. But a lot of people will use, or I don't like to use them interchangeably. A lot of people will use breakout to the downside as well. I like to say breakdown because it's breaking down. Uh, and I can just kind of separate the two. So what you're looking at when you have a breakdown gap, I want to use AT&T because one of the things. So first, let's hit myths, like misconceptions and myths. Um, One of the things that people think is that all gaps get filled. People will say that, however, that's not the case. And I didn't particularly take the liberty of finding a gap that has been filled, which would have been very good for this. But to put it into a simpler perspective, right? If there's a stock, stocks are based on a company's valuation, right? So if a stock is going bankrupt, a company is going bankrupt, their stock is obviously going down, right? If there's a stock that's going down, headed to bankruptcy, and that stock has a gap down on its way headed to zero, then those are just the instances where it's very likely that gap didn't get filled to the upside as this company headed down into bankruptcy, right? So with that understanding, just that simple concept, that can help you understand that not all gaps get filled, okay? Now, when we're looking at gaps, I want to show this one here on AT&T because this is why you don't trade the all gaps get filled mentality. And then, of course, there's certain ways that you should look at it. So we have AT&T, May 17th, 2021. There's no earnings. The dividends was here. Earnings was over here. So they gapped up on earnings. This looked like a week or two later. So I'm not sure what caused this, but you can imagine there was some sort of catalyst that would cause AT&T to drop like this in one day, right? Compared to all these other candles that are a lot smaller than this big red. And this is only 2.7%. But for AT&T, that looks like that was a pretty big move because it pushed up, it opened up here, and then came all the way down as opposed to like this day where it was like a real tight range, right? So it created this gap on the chart. And I remember this because a lot of people were like, yo, AT&T is a good company. Dividends on a buy, it's going to fill that gap and we'll be good, right? Fast forward to today, AT&T has still not filled this gap and it's been a year, right? So how can we identify these gaps that are very huge but likely aren't going to get filled? So one thing to note is the bigger the gap, the less likely it is to fill. Just because that means there's a bigger price change that has to come in to fill that gap. All right. So naturally, if there's a gap that's $1 on a stock and there's a gap that's $50 on a stock, it's more likely that the $1 gap gets filled than a $50 gap, or at least in terms of time horizon for it to make that fill is most likely going to be quicker on the $1 gap. Okay. So one of the things to note is looking at the volume that comes with these gaps. So you see, we have the volume indicator on here, and you're seeing just kind of like regular volume. We'll put a line here. So we're looking at the volume. And if y'all have indicators on your charts and you're not like charting with your indicators, you might be missing out on a little something. So we have regular volume. We see it kind of tops out around this level right here for the most part. We have a spike right here due to earnings. But then here's this big gap day, and it absolutely shoots up higher. This is the most trading volume this stock has had. I mean, so this is going back to the beginning of 2020 right here. So the past 2 years, this day gave the largest volume out of the past 2 years, right? And prior to this, you wouldn't have known. how it would trade in the future. So if we come back more, now we have May 2021 back to the beginning of 2019. So still 2 years, you see the largest volume AT&T has had with shares traded for a day come with this gap down, right? So looking at this big red bar, looking at this gap down, where this huge volume come in for that day, that's what's going to be your indicator that that gap is there. Not to say it will never get filled ever, but when you see a huge, crazy volume spike on a move, period, right? And that's why a lot of people look at volume when trading, is because typically when there's a huge volume attached to moves, those moves usually lead to continue that way, right? So this will be not a continuation gap. This will be a breakout or a breakaway gap. A gap and go is like that strategy where when you see something like this, you're trading in the direction of the gap. What most people like to do is what we call fading the gap or trading for the gap fill. All right. And when you fade the gap, that's something like coming over. Let's see if we come. So if we look at this gap here, right? So on the 10th, it closed at 2069. On the 13th, which was over the weekend, we see it opened at 2040. Closed at 2069, opened at 2040, right? So that's created a 29-cent gap. Over the next couple of days, it sold off. Here it gapped up, right? But then it came and filled that gap, what looks to be June 23rd. So 10 days later, it filled the gap, okay? Now, when we're looking at these gaps again, look at the volume. And it's on the daily chart, so you need to give it more time to play out. Looking at the volume on this day, we see it's a little higher than normal, but it's not nothing big, right? Let's look at this gap right here. This volume is a lot bigger than even our big volume days, like these that kind of stand out of our regular. This is a lot bigger. What do we notice with this one? The gap stays a lot longer, right? So if we just put a little whoop to show us the gap space, we have larger volume. We see that gap stay a lot longer. It didn't fill until over here. Whereas this gap that had a lot less volume filled a lot quicker. Right? I'm gonna do another check-in. I talk a little fast sometimes. So another check-in. Y'all got questions, put them in the chat. I'll pause right here real quick. If we good, just throw a Y. Rayshawn says, save this live. Rayshawn, all lives do get saved and posted into the Discord. They all get saved. DeWiz said, why? Well played, sir. Cool. Cool. I had y'all drop Y's so I can see who paying attention. People who don't put Y's get kicked. No, I'm playing. All right, so it's good. It's making sense. We're understanding how to use volume with the gaps to determine the move or how strong that gap is or how long is there. So you can't really predict, as far as I know, you can't really predict the time it'll take because, you can't really tell when price is going to do what necessarily. But again, what we can look at is the volume that's with those gaps. And we see this gap on April 11th, higher volume than all this other stuff. It didn't get filled to July 20th, where we have this gap, June 10th, got filled June 13th. Look at the volume compared to the other gap, right? So that's when you're looking at gaps. We understand that not all gaps are going to get filled. Like I said, if a stock is headed down because it's going bankrupt, then any of those gap down most likely aren't going to get filled on the way down. Is the gap, so somebody put in the chat, is the bigger the gap, the bigger the volume, the longer the gap will take to fill. Yes, right? So that's what I'm saying. Of course, who knows, right? There could be a big gap on big volume, and then there's more volume the next day that overtakes that. But typically what you're going to see is when you have larger volume, those moves are going to hold a lot longer, right? And that's on any time frame. All right, but specifically speaking to gaps, yes, you see larger volume. Again, looking at these that stand out compared to this one, right? That's why we're not shooting for a gap fill on this. It was absolutely crazy, right? So that's one example. Now, let's look at when we're trading gap fills, let's look at a continuation gap, all right? So a continuation gap, typically you'll see, and that's one, again, that you will want to trade into. A continuation gap, here's another one, big volume, huge volume compared to all the other days. We get the gap right here. It doesn't fill that gap until months later. That's September to February of next year, right? So huge volume, right? So that's what I'm saying. And you see the support that gets held right here that actually stops it from filling the gap. So a continuation gap is when you have a gap that occurs in the direction, and you can also be sideways, but typically it's in the direction that the stock is already trending. So if we look at AT&T here, we're already in an uptrend, right? Without taking this into a trend class, because I am going to teach on trends, because that was a class that got voted for too. If we just look bottom left to top right, we see that we're moving up, right? So that was the easiest way to identify we're in an uptrend. Just look bottom left, top right, see what direction you're going. We're in an uptrend and we gap up in the uptrend, right? So this goes to the whole thing about not fighting the trend. The trend is your friend, trade with the trend. So when you get a gap in the direction of the trend and it has, again, super strong volume, then it's most likely that that gap is going to continue in the direction of the trend, right? People are already pushing money up into it to buy it and make it go higher. More money is flowing in to make it go higher. You don't want to short that because it's clear that it's continuing that move. We're pushing it, pushing it, pushing it, right? So here's a nice example of it in the uptrend. See the uptrend, we see the gap up, so it's a continuation gap. And then we see that it does take a couple of months for that gap to get filled, right? Now let's look at one to the downside. So here's some interesting ones, right? So right here, this wasn't even a big gap day. So this one flipped back, right? And that's what I was saying. So that's what I was saying here is we have huge volume on this one, but then it shot right back up and closed it the next day. So sometimes you get those, but more often than not, I think you'll see that those gaps that occur with the huge volume, those are going to hold typically, right? So you have an exhaustion gap, and let's find one of those where you have the gap, the trend is going strong, you gap, but you gap with very little volume, okay? So I forgot we're on the daily chart. So looking at right here, this is a close at 2962. This opened at 2969. So that's why you see like it gaps almost every single day. But these gaps are starting to be very small and very low volume, right? So this day it had a gap. If you look at the volume on this candle right here, compared to like all these other days, it's very basic, right? Nothing really there. So this is looking at us seeing that the trend is starting to die off. And then if you get into the candlesticks, you know, you call it a reverse pin bar, inverted hammer, however you want to play it. But you see that at the end of the day, the bulls won the day, but the bears finished the day in control. And then here's another one, perfect example, where this gap hasn't gotten filled, right? So this is a gap from 2020 that hasn't gotten filled. So this was this closed at 2972, and we haven't hit 2972 ever since, right? So that's another gap that hasn't gotten filled. So those are the exhaustion gaps. You're looking at it moving in the direction of the trend. We saw we had the big uptrend. So we're looking at just the macro side of price action. We saw a big uptrend. We saw a consolidation period. We have our support level here. This is in the charting class, but we have a support level here. We get this gap that's dying out, bearish candle at the end of the day. It forms a bearish candle. We gap down and we have the movement here, support test, bounce back to this previous support as resistance. Anyway, you can tell that it's dying out of volume or dying out of momentum because of that. Okay. So when we're looking at trading it, I feel like I'm gonna have to erase some lines. That's what I put in the spot. All right. So when we're looking at trading gaps, same day. Okay. Here again, you see the concept I was just talking about, not fighting the trend on the gaps and that bigger gaps. So in addition to more volume gaps holding stronger, the bigger gap, like I said, typically holds stronger. So even looking at SPY here, we have that gap, gapped again here, gapped again here, gapped again here, right? So look at all those that aren't super big on volume, but are huge in size, okay? And you see that those gaps from October didn't get filled to January when we had this big January pullback beginning of the year, all right? So this is why you don't want to trade gaps same day with the assumption that they're just going to fill because they're gaps. No, right? So when we're trading gaps same day, looking for the gap fills, a couple of different ways you can take it, all right? So let's slide over to a little sooner. I'm gonna get rid of all the little drawings on here. We're gonna take it down intraday. All right. And I'm gonna take off my pre-market and post-market. Okay. So one of the things to note is that when you're trading gaps intraday, there's a couple different ways you can play it. All right. So one, you can trade it with a little more conviction when the gap occurs inside of the previous day's body. Okay. So what I mean by that is, let's look at an example. Let's see. So here's an example. Okay. So this is July 1st. We opened up here, moved up here. Over the weekend, we gapped down, but our gap down, our opening, is still within the body of the previous trading session's candle, right? So again, not an every time thing, but what you notice is a lot of time when those gaps occur inside of the body of the previous candle, a lot of times those do fill. All right, and we see that with this, it gapped down inside of the range of the previous day, and I'll mark that out. Oh, can't mark it because I hit the drawings. All right, just remove them all, put them back later. All right. All right, so if we mark out just a range, we gapped down inside of that range and we went and pushed the gap fill, okay? If we look here, this is July 8th. So here's one where here's our range. The next day, oh, this is over weekend again. We gapped down, we open. I'm tripping. We open right here. This is at 385.82. This low is 385.66. So this open technically was inside that body. However, this gap did not fill that day. All right. So what you can look at is you can look at pre-market levels. The other thing you can look at is, we take it down even further. It's probably gonna be hard for me to get back to the July. So let's slide all the way back to that example. Let's turn extended. All the way back. So we come back to that July, I think it was like a July 11th. So let's look at this. July 11th. Okay, so here's the gap, right? So let's look at this on pre-market. This is how you would trade it if you're going to trade the gap fill. And this is why having pre-market data turned on can be helpful, depending on how you're trading. If you're swing trading, you probably don't need it. But if you're day trading, it's definitely going to be useful because price is price and all price data can be used for your benefit. So what you'll notice and this is what I like, is it's rejected right off the pre-market high, right? So that having pre-market, oh, sorry, that's post-market high. Nope, that's pre-market high. Okay, I was right. So having that on would have prevented you from taking a losing trade, anticipating the gap fill, right? Let me go back. Pre-market high, resistance. During the day of the trading day, the first candle pressed, right? So if you think about this, if you replay this back in your head, right, and we're going to replay it back on the chart, all right, let's think about it real time, real life. It's pre-market. We know we're gapping down, right? And then let's get our first candle for the day, which is right here. This is our first candle for the day getting printed. Now, this candle, while it's forming, you're like, oh, snap, because this is all pre-market again. So assume that you don't even know this exists. All right, you don't even know this exists. Okay. That first candle starts shooting up, you're like, oh, snap, it's about to fill the gap. I'm getting calls, load up the boat on calls, calls, right? Wrong, right? And what could have helped you prevent that? And that's a big thing with trading that I try to get people to think about. Is not always about how can you win, but a big part of it is how can you prevent losses, right? So how could you have prevented this loss? You see, it rejected the pre-market high. Right now, if we took the pre-market high and broke above, or if we closed above it, if we closed above it, then I think there's a lot higher chance we push to fill the gap. But here we see it treating it as resistance, as it often does. And if we let the day play out some, we see that it also treated it as resistance again. Let me just, right? So now we see we're getting those candles again coming to reject. And so if you're in the Discord and you see me talking about like, hey, SPY closed above this on the 5 minute or does this on the 2 or whatever, I'm taking calls. Like, this is a prime example. This is a prime example of how I would I put my charts in the chat. I try to give y'all like pre-signal alerts so that if I'm getting in a trade and it's shooting up while I'm trying to type it out, y'all not missing it. But this is a prime example, right? Sets the level, rejects again. All right, so we're not taking a gap fill trade on that. Okay, is that making sense? Using the pre-market, why me up in the chat? Throw dollar signs. We're on dollar signs now. I feel like that was gym worthy enough, even if you already know it. For those who didn't know it, I feel like out of the 54 folks on here, that's going to either make somebody some money, save somebody some money. Somebody was probably like, yo, I definitely would have bought calls, bro, and I would have got toe up from the flow up, thinking it was filling that gap. But now I see how I could have made sure I didn't lose that money, Jay. And we got the dollar signs. Thank you, Leon, Deborah, Kiana, Rosa, Wally, KD, Wiz, Kendrick, Charlotte, Tracy. Thank you. Can I repeat the previous candle? Can I repeat the previous candle if filled up by the other candle? Shamika said, damn, I missed it. Now to catch the replay. Now, I'll re-explain it very quickly. Tiffany, I don't completely understand your question. I don't think I get it. So if you can elaborate, I'll be happy to try to explain and answer to your question. But I don't fully understand what you mean. So for those who missed it, for those who might have went over your head a little bit, because like I said, I do talk fast. I think about all this stuff. Real simple, real quick, right? We go back to regular trading hours. And this is for if you're trying to trade, if you're trying to day trade a gap fill. So I'm going to go back to the 11th to our gap that formed here on the 8th to the 11th, right? Regular trading. If I go down to the things, it's gonna keep me back. Trading view. Why does it do that? I don't pay for the Pro Plus special premium package for it to kick me all the way back to today's date every time I change. So I'll talk to them about that. All right. Let's come back, bring it on back. All right, so here we go. All right, so on the 8th, gaps down, right? We just covered what a gap is, we covered why gaps happen, all of that. Cool. Gaps down. And here on the 3-minute, if we take this bar away, our first day, man, I'm sorry, y'all. Even if you charted that right there as the support, you would have saw it didn't break that and treat it as resistance, right? And you take the wick, take the body, whatever it is, it didn't hold. But nevertheless, what I was telling, what I was showing is that trying to trade immediately just because you're hoping for a gap fill doesn't always work. It doesn't always make sense to do so. And there's ways that you can prevent or not confirm 100%, but give yourself more confirmation that the move is taking place. And like I say all the time in my channel, I'd rather be late to the right party than be early for the wrong party, right? And so when I say that, what I'm meaning is I'd rather miss out on a 100% move and grab 60%, but be correct, than jump in trying to grab 100% and lose 20. Right? At the end of the day, I'm still stacking. I'd rather be stacking than losing. All right, so I'm gonna check the chat. You can change it on the settings. Appreciate you, Moody Fry. So I'm gonna go back to then I'm gonna come back to Tiffany because I saw Tiffany said that here. So when you look at this, when you look at, again, one, we have the support here that turned resistance and rejected. That's why it's important to market levels, or at least know about levels and at least see this. The other thing is block price to bar ratio. Okay, I don't know. I'm going to figure out later how to prevent it from kicking me all the way back to the current day. But until I get that knocked out, we will be working with what we got, and then we're going to figure it out. So when we put on our pre-market data and our post-market, which actually does, I think it does cost on trading view. When you look at that, even without factoring in the previous day, you see that our pre-market high is here. And just for today's trading day, we have the gap that's up here. Yeah, right about that. So we have this gap right here. All right. And so again, this is the market opening. It shoots up immediately. As soon as the market opens, it shoots up, right? People are like, yo, it's going up, call. Test the pre-market high, rejects the pre-market high. All your calls are done, all right? Comes back up, test it again, drops again, all right? So that's what I'm saying about being able to use pre-market data to confirm at least more that the move is actually happening. And so once we get this candle to close above the pre-market high, hey, maybe we can make a move, all right? But until then, I'm like, nah, bro, I'm waiting. Okay, so Tiffany, your question was, you can use the previous candle that is engulfed by the second candle to determine the gap fill. You can use the previous candle engulfed by the second candle to determine. Okay, I think I'm kind of getting, I feel like this is something where like somebody else would just be like, bro, what she's saying is 1 + 1 = 2. I'm like, oh, I just was not getting that. I need to go to bed. I'm gonna just revisit what I said about that because I still don't get it. If you understand, I bet I know who just put something in the chat. Oh, okay, that wasn't what I thought it was gonna be. All right. So what I was saying with that again is just that the bigger the gap, yeah, bro. Like I know Moody gonna be like, bro, I know what you're saying, bro. I know what you mean. Oh, we'll all get to it. So what I was saying is that the bigger the gap, the less likely it is to get filled, or the longer it takes to get filled. Oh, man, let me show y'all something. My fault. I forgot. I'm about to start wrapping class up. It's a website I came across the out of town that will tell you where the gaps are. Doc, I just have to figure out of all my tabs, my 5 million tabs I got on my computer. Here we go. So, boom. So this website is called, I think it's called gaps.db. Yeah, gapdb.com, right? So gapdatabase.com. And this website allows you to find gaps and it gives you the information, right? So like SPY right here, hit check. Like, yo, tell me SPY gap ups. I don't have the fill gaps. I don't want to see gap fills. So this is telling me just like that, without me having to go look chart and do. It's telling me that, hey, gap, there's a gap on 7/15, 10 days ago. Maybe it's 10 trading days because it's the 29th. And that gap price is 379.05. Right. And here's the percentage needed to move down to fill that gap. We need an 8% drop to fill that gap. Right. But within the past year, based on this database, there's only 2 current gaps that haven't been filled. So in the past year, 15 total gaps. And I think there's some metric that they use, of course, because SPY gaps so much that there's definitely more than 15 gaps. But it might be gaps that are gaps outside of the previous day's range, or might be a gap bigger than 1% that I'm not aware of. But this does allow you to see gaps that come up, and you can easily look at them and you can start making targets if you want to swing. All right. So that if I'm looking at taking a swing on the market for the put side, appreciate you, Friday Daddy, for dropping in the chat. If I'm looking to swing puts for the market, then I'm probably going to play, because we know we can use gaps as a target, and I might make a trade with anticipation of a gap fill. All right. So if I grab SPY, and I've been waiting to buy SPY puts again, but I'm not buying them until I start to see that we're like running out of steam and we just shooting up. We're in a recession, but we're going up, whatever. So I would target the gap fill, and I might buy a 381 put or a 383 put for 3 months out. And basically what I'm saying is, I'm thinking within the next 3 months, we're going to at least fill this gap. All right. At least. All right. And so looking at this again, you can see that the majority of gaps do get filled. There's another thing on this site where just show me the tools. All right. Because I don't need to go to the home page. So another thing on this site, we're able to show you like different stocks under different indexes and the gaps that they've had. Again, I don't know what they use to determine what's a viable gap. I assume it's some percent change from closed to open. It's probably somewhere on the website, but I don't know. But you see a lot of them fill, right? Typically they do get filled. A lot of times there might be one that kind of left stranded. I'd assume this one is from, gosh, it takes you to stock charts. I would have thought it took me to its own actual thing. But so here's just the website. I wanted to share this with y'all. I was gonna be mad at myself if I didn't share this with y'all, because I just found it the other day. And check it out, right? So you can look at gap ups, you can look at gap downs, make a free account, yada yada. Cool. Has there ever been a gap that's never been filled? Yeah, bro, I just talked about that. So there has been gaps that have never been filled, because there are stocks that have gone up ridiculously over time, to the point where they might have had a gap up in the early stages that never got filled. There's stocks who I can say for certain have gone down, and if they're headed down to bankruptcy and they gap down in their midst of going down, it's likely that they didn't go back. But for the sake of doing it, here we go. So let's look at NVIDIA 2019, $36. So let's go back to TradingView real quick. Just for the question. So if we pull up NVIDIA and we go back to 2019 at 36 bucks, NVIDIA is currently at $181. We go back 2019. So this might be the gap they're referring to. Put a line right here. All right. So here's a gap on the video. A gap up occurred here. And since then, we have never come back there. So that's 2 years in the running. But because my math isn't always A1, what I will do is use this fancy schmancy measuring tool and look at it and say, for NVIDIA to fill that gap, we'd have to drop 80%. NVIDIA would have to drop 80% to fill that gap to the downside. So the odds of NVIDIA dropping 80%, I mean, you know, even with the strong bear markets, stocks, typically stocks that are very good, you know, companies that are solid companies like NVIDIA, like Apple, they not dropping 80%, you know, typically, unless we just all out, you know, going crazy. But so yeah, there's your example of a gap that I think most likely we won't get filled. NVIDIA dropping 80%. And that's not even from its highs, right? That's 80% from today. From its highs, that's a whole different story. That would mean that NVIDIA dropped about like what, 87, 88%. Yeah, so NVIDIA have to drop about 90% from its highs. The odds of that, fairly low, right? D said, according to gaps, db.com, 92% of price gaps are filled. I agree with that. Yeah, so a good chunk of gaps get filled, but no, just based off of like kind of logically thinking, not every gap should get filled, right? Like this, like I said, stocks that are doing great probably have a gap somewhere where they jumped up and they never returned. Stocks that were doing horrible and eventually led to bankruptcy or got delisted, they probably had some gap downs because they were doing so bad that they never went back up and filled the gap. All right. Any questions about what we covered today? What y'all got? What y'all got? Outstanding. There's Gap Band. I should have played the Gap Band. Any Tesla gaps, go to the website. How? I just showed you a website. Why are you asking me? I'm joking. I'm joking, but I'm not joking, but I'm joking at the same time because I will pull it up for you. But I highly encourage you to go to the resource and check for yourself. What? Let's look at it. Tesla gaps. Yes. We got 94 of these gaps. 18 of them haven't been filled. All right, so here we go again. Oh, I could just look at this. So Tesla will have to drop 95% to fill this gap from 793 days ago. Is Tesla going to drop 95%? Probably not. So the odds are that this gap is going to remain for a very long time. All right, those are gap ups. Yep. These are all filled. That's what I figured. Yep. So that's when you're looking at stocks, companies that are solid or companies that people are going to be buying up. Typically their gap fills to the top. Like I said, when you're looking at the trend, when it's trending up and it gaps up and it's a pretty decent gap, that's going to hold. So Tesla, see that we got the gaps, 95% drop for that gap to fill. pretty unlikely. SPY is a gap to fill at 230. Will SPY hit 230? Right. Let's look at something like GameStop. Let's look at gap downs on GameStop. So GameStop had a gap down 728. All right, GameStop is now at $34. Remember when GameStop was at like $300? So what are the odds that GameStop, goes up 100%? I ain't no telling, right? So there are gaps that, again, are not going to get filled, are highly unlikely to ever get filled due to the fact that they were, like GameStop, for example, no fundamental reason for those gaps to even occur in the first place, or for the stocks to be up at that point. So the odds of them returning to that point are also very low. Like I said, stocks that are going bankrupt and constantly losing money, losing shareholders, they'll probably have gap downs, and probably not fill those gaps, because that means people have to go buy back into it for it to fill the gap. People most likely aren't going to be buying into those, right? Institutions aren't trying to buy stuff that's going down, right? That's a big thing to keep in mind. Institutions are not buying stuff that's dropping, or that they think is going to continuously drop, right? And then you have stocks like I just pulled up in the video, pulled up, Apple, and we could pull up Amazon. So we look at Amazon. From times it gapped up. Almost 1,200 days ago, Amazon had a gap at the $49 mark. All right. So again, Amazon have to drop 63% to fill that gap. And that's not even off of its high, that's off of today. All right. So the odds of Amazon dropping 63%, I don't really think that would happen, but there you go. All right. So I don't think we have any other questions. So I guess this is a wrap. It looks like it's a wrap for the class. Somebody asked about Peloton. Here's your gaps to the upside. Here's your gap downs. Lots of gap down. Oh, Jesus Christ. Yeah, there you go. Are all gaps getting filled? Peloton is at $9.49. It has a gap at 145. It has to move up 1,435% to fill that gap. Is Peloton going to go up 1,435%? I don't know. That's a pretty big move to make. It had to have done it before to get to that point, but it's a pretty big move to make. So with that being said, I'm going to stop the recording here. I appreciate y'all for coming out. We're going to have Club MSC as always. Thank you, AK Lee, Ace Alfredo, Andrea, and Fry Daddy, or Alana, maybe? Alina? BW, Charlotte, Charmaine, Werba in the house, Christopher, Dana, DC. I'm not getting off Zoom with DC here. Deborah, D, Denise, Donise, East Hanif, iPhone, James, J, Shy, JK, John K, Camille, Kashawn, Kiana, Kendrick, KH, Leon, Lily, Los, Lou, Luther, Hines, MC, Moody, Nebraska, Katie, Nebraska and Katie. They both on Zoom. Nashay, Nesha Jones, I don't know why I always do that. Nico, Bell, Paulette, my boy Quinn, Rosa, Seth, Shamika, Shanice, Shay, Dub, Smith, Tiffany, Tracy, you, me, Wally, Weddleson, X-Man, and you guys Zoom user. Appreciate y'all for coming out. That is the end of the class on gaps. Y'all got the website. Y'all know how to look at gaps that are probably not going to get filled. Y'all know how to trade intraday gaps. Y'all know how to not get burnt. And don't be like them scrubs, bro. We not scrubs around here. We don't do that scrub trading stuff. Pull up the pre-market, mark them levels. When that thing start moving, look at that pre-market and be like, let's see. All right. And don't get faked out, bro. Like I said, it ain't always about how much money you can make. That's in trading and in life. It's also about how much you can keep. All right. Recording is done. Now we finna get crazy.